So, financial control procedures, transactions are correctly recorded, obviously. Business assets are safeguarded. Production of accurate and timely information. That's the target of a financial control procedure. When you're setting up a control in your company, you need to make sure these are in place. Examples of financial control procedures. Checks for bank transfer over to certain amount need to 2 signatures. Authorization limit on purchase orders, authorization of expense claims, effective credit control procedures, effective computer security and access levels. Weakness may be signaled by cash or checks going missing, excessive bad and doubtful debts. These are indicators. Customers not paying within the credit terms, suppliers not being paid on time, unauthorized purchases being made, failure to produce accounts or other reports at the specified time. These are indications of weaknesses or possible fraud. What are the functions? Purchasing, HR, finance, sales and general administration. Controlling payroll. Key controls over payroll cover documentation and authorization of staff changes. Anyone preparing payroll? So you know what the ghost employee, you know what the ghost employee is? Heard of ghost employee, you know? Let's say you have a payroll of 20 people. One guy left or dead. But this payroll guy is very shrewd guy. He keep on paying the salary to that dead guy and transferring that salary to a bank account owned by this man with another somebody's name. So company doesn't know. 20 people's salaries keep on going. That type of fraud is known as ghost employee. So documentation and authorization of staff changes, calculation of wages and salaries, payment of wages and salaries, authorization of deductions. Inputs into a payroll system, clock cards, timesheets, bonus details, salary systems, processing, output, pay slips, payroll analysis, income tax reports and confirmation of payment. Here again, please remember, it should be happened more than one people. There should be internal check and there should be independence. And one guy should not be doing everything.
And nowadays, pay slips.
All electronic, no?
Yeah.
All electronic, so you don't need
all are recording in the
and
WPS.
see WPS, SMS, email comes now. Payroll controls will be needed to ensure that correct amounts are paid to employees and the tax authorities. Example of controls, segregation of duties. Authorization to change standing data. Reconciliation between total pay and deductions. Comparing budgeted payroll and actual. Purchases and sales cycle. Purchasing is an important area to control, especially for high value items. Only properly authorized purchases should be made. Here also there is one fraud. Let's say I am a purchasing clerk. We are our company is purchasing steel aluminium and very huge quantity we are buying. What I do is I slowly opened up a small business on selling aluminium style on my wife's name. I delegate and transfer all my purchases to that shop or that company. That is ghost supplier. So just to keep you informed. Only properly authorized purchases should be made. Documents should be matched at all stages of the process to ensure that organization gets what it is ordered and only pays for what it orders and receives. There is something called three-way match. You know what the three-way match is? You should have a PO, you should have invoice, and you should have GRN. Good receipt note.
Good receipt.
Before you issue the check, the paying clerk should match these three things. And then confirm that all are matching, then only you issue the payment. This is known as three-way match. Documents, the payables ledger makes it possible to know how much is owed to each supplier. And this is the payable ledger system: input, processing, output, invoice details, return detail, payment detail, all comes, then invoice, then the payment goes. So primary ledger we talked about. Computer updates balances outstanding to suppliers. Output. Computer can produce lots of different reports. Payables, current balance, individual balance. See, this is the total, this is individual. Controls over purchasing will be based around buying authorization, accounting, recording, goods invoice and custody. So you need to have set of control for all of these. So these are individual small control. For ordering, use certain suppliers only. See, when you want suppliers in a huge companies, there is something called supplier registration process. You cannot update the supplier register without proper approval. You already have 7 suppliers. Now 8th supplier is coming. So there is a set of procedures. Application, credit evaluation, banking details and his history. All this needed to be received, processed, and our supply register should be automated. It should be part of our Oracle or SAP or something. And to access the supply register, there should be the level of access is different. One is create, other one approve. So this type of control should be there. Obtain authorization, use pre-numbered forms. Goods received. Compare goods received. That also 5%. Compare goods received not with purchase order. GRM with purchase order. Check conditions of goods received. Check supplier invoice correct. Record goods returned. Accounting and recording. Segregate duties of accounting and checking. Record purchase or returns comply. Compare supply statement to payables ledger. Check payment properly authorized. Sales cycle. Like purchase cycle, we have sales cycle. Only properly authorized sales should be made, obviously. This does only want to give credit to customers who will pay their debts. Documents should be matched at all stages of the process to ensure the customers gets what it ordered. It is invoiced for the correct goods and amounts and pays for what it orders and receives. The receivable ledger makes it possible to know how much is owned by each customer. Controls will be based around selling authorization, accounting, recording, goods for outwards and custody. And this similar to purchase that we talked about. And these are all selling controls. Segregate duties of credit control, invoicing and dispatch, obtain authorization for credit terms for customers. Now, you cannot decide the credit terms haphazardly. Someone at top level should approve this. Use pre-numbered forms. Goods outwards, when you dispatch the goods. Authorization of dispatch of goods, check condition of goods return, check signature of delivery notes, match sales invoices with dispatch and delivery notes. Accounting and recording. Segregation of duties, record sales sequentially with invoice numbers. Match cash receipt to invoices. Prepare regular receivable statements. Retain customer remittance advice. PV and follow-up. Overdue counts. Controlling cash. Controls over cash receipt will include receipt must be properly done on time, in full. Then records of receipt must be complete. Loss of receipt through theft or accident must be prevented. Controls of payments, documentary evidence of receipt. Voucher, payment voucher, unique payment voucher. Authorization of payment, someone must authorize. Restricting authority to make payment to specified individuals. Bank reconciliations, one of the very famous control to always to prevent fraud. Used to compare cash book to the bank statement. Differences can be classified. Timing differences, payments and receipts, standing order, direct debits not entered in the cash book, bank charges not entered in the cash book, funds received by transfer and not recorded in the cash book. manual versus computerized accounting system. That ledger and old time ledger, and now we have different computers like QuickBook, Tally, PHP, then DEC, Sybase, then later Oracle, SAP, Mini ERP, all these. Disadvantages of manual system: productivity very big, slower, risk of errors, mistakes can come all the time, less accessible, quality of output, bulk. Integrated accounting software, that is SAP and Oracle. Connected everything, ledger, HR module, inventory module, purchases module, supply module and the customer module. So advanced only entry, updates, only one screen for entry, connect and enter everywhere. User specified report, you can download any report you want. User's workload is simplified. Disadvantage: greater computer memory needed, yes, and fewer facilities than specialist modules. So this is the example of integrated accounting system. General ledger, all these payables, then you have spreadsheet, export decisions, DSS, and executive information system. Database. Database is a pool of data which can be used by any number of applications. It is used not. Good example of a simple database is Excel spreadsheet. That's a database. Let's say you have like serial number, customer name, agreed fees, type of service, phone number, email address, amount received, balance amount, financial institute, like that, too many information there. So a database is a pool of data which can be used by any number of applications. It is used not restricted to the accounts department, obviously. Example: non-current asset database, customer database, and supplier database. Database approach: input data, database DBMS, database management system, then application program, sales application, branch and personal statistics, staff payroll, other applications. Advantages and disadvantages of database: no duplication of effort or data, easy to manage. Conflict between departments who use inconsistencies data are avoided, obviously. What are the disadvantages? Breakdown comes, big problem. If someone hack, big problem. If virus comes, collapse. Access issues are there. Spreadsheet, I don't need to tell you, it's a good example is Excel. It is essentially an electronic piece of paper divided into rows and columns with a built-in pencil, eraser and calculator. It provides an easy way of performing numeric calculations. Used in financial accounting and cost accounting, used to create financial. In Excel, how many cells you don't know? Or how many columns? That's what. How many? I think 256 columns. In rows,
9,000.
something like that. Some Battairam something. I don't know. You can ask the Google, no? Number of rows and columns in Excel sheet. 1 million. The total number of rows and columns on a worksheet is how much? My goodness.
16,384 columns and 1,048,776 rows.
Think about the answer video. They are saying how to find out. Anyway, this is one small example of a spreadsheet. With this, we are done with this chapter. The major purpose of the International Accounting Standard Board is to ensure consistency in financial control, corporate reporting, external auditing. What do you think? IASB, they are worried about
Financial control.
control. Are they worried about the financial control or they are worried about the reporting?
Reporting, sir.
Corporate reporting. The system used by a company to record sales and purchases is an example of which of the following? Sales and purchases are example of transaction, correct? So transaction processing system. Malachi has been asked by his manager to obtain information about ABC company, which is bidding for a contract offered by Malachi's company in the near future. Two statements which will use as the response are the statement of financial position and the statement of profit and loss. The information is required to obtain is as follows: the equity of the company, operating cost as a percentage of turnover, long-term borrowings, and liquidity. So, which of the following matches the above items of information with the financial statement in which they would be found? First, they would what? Equity of the company. Where you will get the equity of the company?
Statement of changes in equity.
But they don't give that one. They only give in two for you.
So statement of financial position.
Statement of financial position. So the first answer it should be statement of financial position. So A or D cannot be B or C. Correct? The second one is what? Operating cost as a percentage of turnover. So for that we need SOPL. So still we cannot eliminate. It's again A or D. Third one, long-term borrowings. SOP. So D is done. With that, we are done with this chapter, and then we will stop our lecture.